Welcome, and today we are going to discuss how to choose stock investments. This will be a series of videos. Today's video is part one, which will discuss target price. There are so many stocks, and how do we find out which stock should we invest in? Number one, and number two, how do I compare some fundamentals? And I think this will help all of us, and hopefully this will help you also to use fundamentals in a way so that it's brilliant. Once we have a stock in mind, then what we can do is let's find out what is the current price today of that stock. Second, how much expected return do I expect from this investment? Three, we are going to find out the analysts, what they are saying about this stock. So we have 3 price points. 1, current price. 2, my target price. And number 3, analyst target price. And we are going to compare them side by side based on my expected return and find out if we are going to invest on this stock. Let's take an example of IBM. IBM currently trading at 106, and the dividend they're paying is $6.48, which is about 6% return from dividend. Now look at row A, and if I am expecting a 15% return on my investment 1 year from now, then 6% I am getting from dividend. The remaining 9%, which is 15 minus 6, 9% should come from the appreciation of the stock. So that transferred to 1 year from now, I would expect the price to be at 115. Still I'm in row A. Okay. Now I looked at what are the analysts are projecting on this stock, and their projection is 1 year from now this stock would be at $138. Now keep it in mind, it changes every day, okay, based on the trading and based on the information come in. So it's good to keep an eye on 2 things. Of course, the current stock price, and if analyst projection changed. So if it's going higher, then you are even better. So what I need from 1 year from now, my $106 investment in IBM turns to $115, which will translate that to a 15% return compared to the analyst, they're saying $138. So to me, looks like this is a good buy because I have a upside of $23 compared to what analysts are saying. And usually analysts look at a lot of very different things. Here we are just looking at one thing, which is basically the price is this, how much appreciation should I expect, or what's my expected return? And then we are comparing this to the analyst projection of the price. So in this case, I took 15%, 12%, 10%, 9, 8, 7 various expected return, and it looks like all of them would fulfill and I would be better off buying this stock. So then let's take a look what analysts are saying on this stock. So on IBM stock, if you take a look, let's take a look at April. So April is a very tough month. March 2020 market crashed 10,000 points, about 10,000 points, still very highly volatile, and in this market, this is what analysts are saying on IBM. Strong buy 4, buy 3, about 15, they're saying hold, underperform 3. And if you average their prices, you will get that target price. So based on this, we can see that this could be a stock which is from hold to buy. Now, let's take a look at Microsoft. Microsoft stock is trading at 154, the first column, you can see, and then the row A, B, C, D, E, F, G. And they're paying a dividend of $2.04. So the return from dividend is about 1%. Now, keep your eye on row A. If I am expecting a 15% return and I got my dividend, which is 1% on my investment, then left is the 14%, which I should expect from the stock price going higher, appreciation in value of the stock. So based on that, see the formula on column 6, you can copy and paste in your Excel and you'll get the same number, which is $175. So based on my 15% expected return, I should expect a value of $175 of Microsoft stock at the end of year 1. Same thing, you can look at row D. If I had a 10% expected return, then the value would be 167. Like I said, you can put it in the Excel formula. This should work out pretty well. Now, let's take a look at column 7, which is the analyst projection. Now, they are saying their projection is 1 year from now, the stock price would be at $189. So, if I compare analyst projection and stock projection, looks like the delta that we have looks like that our number is lower than the analyst expectation, which is good, because if analysts are correct, which is an average of all the analysts, so then my number is lower, so we should be able to get a good return. What we are looking at basically is we will have an upside. If everything goes well, this is a good buy for us because our number are lower than the analyst expectation. So we are being very conservative, and very likely if you're looking at a 10%, you can jump on it because you might have an upside of 22, if not more. Now, of course, keep that in mind. It always changes. Always changes. So it's good to keep an eye on that. These are the basically very simple fundamental that we should look at when we invest in a stock. Now let's take a look at what our analysts are saying about Microsoft stock. Let's take a look at April, and strong buy we have 14. Amazing. Buy we have 13. Hold we have 6. And sell maybe 1 or 2. I don't see the number here. But so when you look at this small little graph and the strong buy and hold combination, plus you compare your target price to the analyst's target price, we are in a very good position to invest in this stock. Why? Because number one, my expected return is lower than the analyst's projection. Plus, there are a lot of strong buy and hold compared to sell. So, based on this, I would say this is a very strong buy. So, Microsoft at this point actually in reality is a very, very good stock to buy. Every single day it is going up, even in a bad economy. Now, let's take a look at Walmart. Now, most of you know that Walmart is very less risky investment. So let's take a look at that. Today's price was $119. Walmart pays about $2.16 in dividend, which is about 2%. So if you invested in stock today, you'll receive a 2% return. Now, if my expected return, looking at row A, is 15%, column 3, I put different type of return, and let's take a look at the first one, which is 15%. So I would expect the Walmart stock to appreciate by 13%. Now that 13%, if I translate, what is the price going to be 1 year from now? So I would expect $135.24. Now let's compare that to what analysts are projecting on this stock. Their projection is this stock is going to be priced at 129 at the end of year one. So in this example and in this scenario, it's a very, very good comparison because my number is higher than the analyst projection. Now remember, analysts are looking at a lot of different things and then they're coming up with this number. And in this example, I'm looking at only one thing. What is my expected return? And based on that, what is the price going to be 1 year from now? Right? So I'm going to take a look at A, B, C, and D, which is I'm expecting either 15%, 12%, 11%, or 10% return. And all of them are negative. Look at column 8. So my number is higher than the analyst projection. So in this case, either if I'm holding it, I should sell it, number one, and number two, if I'm planning to hold it for 1 year. So we should sell it. But on the other hand, if my expectation from this stock, because it's a very, very less risky stock and I want to balance my portfolio with some growth versus less risky or aggressive versus less risky stocks, then if I am expecting a return of 7%, this should actually fill in because at a 7%, my price came at $125 and analyst projection came out to be $129. So still, I am lower than the analyst projection. So which is good, then it could be a buy, or it could be a very neutral not to invest in this stock. Except keeping that in mind, March 2020 stock market crashed 10,000 points. It's lost about 10,000 points in Dow Jones Industrial Average. And usually most of the stock goes down, but in a downturn economy, Walmart stock does not take that deep dive. So less risk, less return, but more safe. And what happens in a recessive economy, what happens is usually this kind of stock actually does better compared to the growth and the aggressive growth or higher price, higher return stocks. So, and to put it into perspective, in 5 days, Walmart stock went from $111 to $119 compared to the other high growth, high profile, high stock value stocks, which are losing their value every day gradually, and it's, going down. So hopefully that makes sense what I'm trying to say on this. Now let's take a look what analysts are saying on this stock. And let's take a look at April for Walmart 2. Looks like 8 of them had strong buy, 7 buy, and then hold almost 15. And there are some underperform and sell. So same thing. From hold, buy, and strong buy is very dominating in this analyst prediction. So definitely this would be also a good buy if you're looking for a less risky investment, but you can cope up with less return. Hope that makes sense. Take a look at go back to the slides, compare your percentage, put that into Excel formula. I already put the formula in there, so you can take a look, just copy and paste, and you should be able to come up with your own number. Fundamentals, once you choose your stock, you must know few fundamentals before investing into it. So once you look at it, you should know what price I am buying in today, what's my exit point. It doesn't matter how far it goes. You must know what's your exit point. So that is very, very critical. And that will help you a lot for a sound and less risky investments. Hopefully this was helpful. Look at other parts. I think part 2 would be also an interesting one. Take a look at that. We are going to analyze different fundamentals on that and see how what kind of information or decision we get from there. Thank you for watching.